Hello, everyone, and welcome to Tech Tuesday with Out of the Box. We thank you for joining today's webinar, Preparing for Year-End, Optimizing Your Accounting for a Scalable 2025, presented by Out of the Box in partnership with Avalara. Today's presenters are Vicki Newton, Executive Director of Accounting and Data Services here at Out of the Box. Vicki has more than 30 years of experience in finance, including a nomination for Top 100 QuickBooks Pro Advisors in the country in her first year as a consultant here at Out of the Box. Her expertise is unrivaled, so we encourage you to engage her with any questions you might have. Also joining us today is Jared Clark, Senior Sales Executive at Avalara. Jared has been in his current role since 2022 and recently moved to Lewisburg, North Carolina with his wife, Sarah, and dog, Cody. Jared is also a huge Hurricanes fan and lover of all things hockey. So if you have any hockey questions for him, feel free to toss them his way. As for me, my name is Jeanette Rattan. I'm Director of Marketing here at Out of the Box, and I'll be your moderator for the day. Just a few quick housekeeping items before we get started. The session is being recorded, so you don't have to take notes. We'll share the recording with you after. It'll also be posted on our website and our YouTube channel where you can access it, share it with your colleagues, and dive in together if need be. We're going to try to reserve some time for questions toward the end, but we do have a lot of content to get through today. So if there's anything we're covering that you want to dig a little deeper into or have a question about, feel free to chat your questions to us in the Q&A box, and we will try to address those in real time. Let's see, I think that's it for housekeeping. Just a little bit about Out of the Box if you haven't joined us before, or maybe it's been a little while. Here at Out of the Box, our mission is to empower entrepreneurs with the QuickBooks-based financial tools, services, and insights they need to thrive. Out of the Box is the premier choice for QuickBooks accounting services, boasting over 30 years of experience and a track record of exceeding the expectations of more than 50,000 satisfied clients. Our comprehensive accounting solutions save you time and money while providing you with the financial accuracy, security, and insights necessary to grow your business. As an elite QuickBooks solution provider, we are able to offer you exclusive discounts and pricing, so please be sure to connect with us before purchasing your QuickBooks solutions. With that, I believe I've covered all of our housekeeping items, so I'm going to go ahead and hand things off to Vicki so she can get started. Vicki, it's all yours.
Well, good morning, everyone. This is that time of year again, and everyone has probably been through this seminar or this webinar, and I know we talk about it, but people still forget steps to make sure that your year-end close is the best it can be for your CPA. And so we're going to talk today about all the things that you should be looking at, and things that we can help you with, and just processes you want to go through for closing out your year. So there it is. We'll be reviewing the steps necessary to provide your CPA with the most accurate, up-to-date information. A lot of times what we find is that the people who are doing their books don't really understand it, and they'll send inaccurate information to their CPAs. So if we don't make sure that that's correct, you're either going to pay too much in tax or not enough, and it can come back to haunt you. So the CPAs love that we do what we do and get everything clean and reconciled and ready so it's accurate. And that's what we're going to be talking about today, is how to get to that point. So first thing is that normally, if you have a CPA that does your taxes for you, a lot of times they have adjusted entries that they make for your tax returns. Now, I find more often than not, you have to ask for those, but some of them will provide them to you because you want to be able to post those entries so they match your return. So it's important to have those entries that are provided. Usually the minute they have their tax return, they should have the entries. And if sometimes the CPAs actually have the ability to post them themselves, depending on what platform you're on, whether it be desktop or QBO. But you want to make sure you have that good understanding with them who's going to be doing that. As we get into books a lot and go, oh, there's been no depreciation posted for 3 years. Well, it's usually on a year-end entry from a CPA. Those entries need to be posted before moving on to clean up a current year. So an example of that is your CPA provides you entries for your 2023 return. And I know there's some of you that are on a different fiscal year. So whatever the end of your fiscal year is, you want to make sure you post those adjusting entries at the end of your fiscal year. So if you're on a regular calendar year, you want to make sure that you post those entries on 12/31/23, because that's going to tie your books to what your tax return said. So you don't want to put them in the current year because it's going to end up causing more work later on. So if you're not sure how to do that, we've got lots of people that can help you with that. So reconciliations. These are very important. And I find that some people will say, oh, well, I know how much money I have in the bank. Well, you've got to make sure you're reconciling. Why? Because they're your report card. If you don't reconcile your bank accounts, your credit cards, your loans, things are not going to be accurate on your balance sheet and your P&L. So first you've got, your bank accounts, any checking, savings, lines of credit, those type of things. You want to reconcile. I say reconcile every month. Some people may do it quarterly. Some people don't do them at all. And you want to make sure that those things are done, as well as the credit cards and any loans you have, and loans particularly because there's interest. And part of those payments, usually there's a principal application and there's interest, and we want to make sure that they're balancing to what the companies are saying you actually owe. And the great thing about with QBO anyway is that all these statements can be attached to those reconciliations, so you don't have to keep paper copies. And if you don't know how to do that, we have people that can show you how to do that as well. So if someone's going in to look at a reconciliation, they can click and just pull up that bank statement or that copy of the loan statement and see what it was reconciled to see if it was correct. We find a lot of times there's just so many things that are not cleared properly that really throws off your bottom line. So this is just kind of showing you, this is where you go to reconcile. This is on desktop, this little thing here. You go to the icon, or you go under banking and hit reconcile. The other thing that you can do, I don't think we have it shown here, is that if you go to the register and you right click, it'll bring up some options and you can go and hit reconcile from there as well. So it's going to bring up all your checks that haven't cleared and all your deposits. Now, one of the things that we want to make sure, like we say here, is if they don't clear, it may mean they aren't real. So, if you have stuff that's not clearing 1, 2, 3 months, sometimes that's okay. Depends on what kind of transaction it is. If it's a check, a lot of times I tell people, contact that person, make sure they got it, make sure it gets cleared. But we do find that sometimes things are duplicate transactions. So we have to look into them to make sure, for one, that's not the case. Because if it's a duplicate and it needs to be deleted, it's going to affect either your balance sheet as well as the P&L. So see, this is showing you that a transaction from 12/16/24 didn't clear, but this is showing a reconciliation for 11/30. Well, that should have cleared by now. So I tell the people that on my team and who I work with that if it doesn't clear in 3 months, then take a closer look at it. But deposits should always be clearing, maybe just the last one in the month. Go ahead. So here it's going to say you don't want to, what you don't want to do is leave things in undeposited funds. So some people say, what's undeposited funds? And it works the same for QB desktop as it does for QBO online. So when you receipt something in to a customer, if it's set up correctly, it goes to undeposited funds. And then when you're ready to make that deposit, you go in here for payments to deposit. You make sure that you've got the right bank account that you're going to make that deposit in, and you're going to click all the items that are part of that deposit and put them, and then it goes into your bank balance on the books as a deposit. I tell everyone, sometimes people may receipt something in, say, on the 29th, and then they don't actually take it to the bank till later. So sometimes that throws off and it'll leave a balance in your undeposited funds. And that's okay as long as the balance equals what's sitting in this area right here for payments to deposit. But most of the time I say, make sure you, especially with your year end, make sure we get everything in there and cleared out so there's no balance in undeposited funds. So after you reconcile, again, you're going to go ahead and you're going to review all the old and unclear deposits and payments before you hit the done button. Because if it's, oh, sorry, shoot. You gotta avoid, I'm sorry, you gotta avoid current year transaction before the bank reconciliation is complete, and transactions from previous years must be voided with an offset journal entry. So let me explain that a little bit more. When you find a transaction that is an error from a previous fiscal year, you don't want to go in and just delete it because then it's going to throw off your previous year balance. So if it's a current year, you got to do that a different way to get those things out of there. We can help you with that. But we don't want to have a bunch of outstanding things again, because it's not going to be really done. But once you've looked into those things and you've made sure that everything's correct, then you can hit done. And the bank reconciliation, you can print it, or in some of the platform and some of the versions, it actually saves all of them. So you can go back and look at them later if you need to. Go ahead. Okay, sales tax. So we have Jared Clark here with us today, and he's from Avalara. And if you don't know what Avalara is, they're a sales tax specialist. He can tell you a little bit more about that. And I'm going to hand it over to him for a few minutes, and he'll update you on what's going on there.
All right. Thanks so much, Vicki. Thanks so much again for having me today. Again, my name is Jared Clark, and I'm with Avalara. And I'm here to talk about everyone's favorite topic, sales tax. So as we approach the end of the year, I'm going to share with you some of the most common challenges that growing businesses face with sales tax compliance and how you can better be prepared for 2025. So the first thing I'm going to talk about is your Nexus footprint. Many companies are unaware that they have reached an obligation in a new state to register and pay for sales tax. This can result in heavy fines and penalties in uncollected tax to your company if you aren't proactively monitoring where your obligations are. So do you have a remote employee that started in a new state this year? Do you work on site in a state you're not yet registered in? Have you sold over $100,000 within a 12-month period in a new state? And exempt sales matter too. About half of the states in the U.S. will include exempt sales into their economic nexus threshold. And keeping track of all of these rules in each state, they have their own rules, their own thresholds around these things. It can be really tedious and confusing. So what Avalara can do is we can help you take the guesswork out of this by automatically tracking your Nexus obligations around the US and also make it easier for you to register in these states that you need to. If you're unsure if your company is registered where they need to be, then I'm going to put in Avalara's free sales tax risk assessment in the chat below. So please feel free to use this and check to see where your company may be registered or need to be registered for sales tax. Let me put the link in here. There it is. It's in the link. Link is in the chat there. And then number two, year-end accuracy. So as we approach the end of the year, I'm sure many of you are going to be preparing to file these year-end returns and as we get into the busier time of year with the holiday season just around the corner. And with this comes many challenges. People are taking vacation time out of the office. Your head bookkeeper isn't in the office. Who is the one that's going to be handling the sales tax? Who is making sure that those resale forms are collected properly and filled out properly for those sales to resellers? If you're offering any discounted offerings for Black Friday, how are you applying those sales tax rates? Have you factored in sales tax holidays throughout the year? All of these things are just really important questions to ask as you guys approach the end of the year. And if you use an automation tool like Avalara, you can take that vacation with confidence and just be able to automate this because we factor in all of the discounting, the sales tax holidays. It's all baked into our system, so we really take away the guesswork that comes with this time of year. And another common thing that I see a lot is companies that are switching software at the end of the year. Some of you may commiserate with this. I know in a lot of cases that accountants don't love when their company switches their invoicing software. There can be many challenges to that when you're switching, completely what you've been doing for a long time. When it comes to invoicing, billing, how you're applying the sales tax. So I see it all the time. And one of the benefits of Avalara is that we have over 1,500 partner integrations, so we can make that transition really easy. And you don't have to change the way in which you are doing the sales tax because it would be automated. So those are just a couple things that that businesses are going to be experiencing as we get into this busier time of year. So again, make sure that you are checking where you need to be registered. It's a great time right now for you to go ahead and determine where your company may have liability. You don't want to let that, go on for too long, because that's what will grow your tax risk exposure. And that will multiply over time the longer that you don't get registered in these states. And the states won't be the ones to tell you. We all know that. So make sure you're getting on top of that. Make sure that everything is accurate. Obviously, that would be, in a perfect world, it would be easy. Obviously, it's not, with all the different rules and regulations across each state. A good one that I always talk about is if you buy a bagel in New York, it's not taxable, but as soon as it's sliced, it becomes sales taxable. So you have rules like that all over the country. So whenever you're doing business in a new state, it's really good to be able to understand how their rules and regulations work for sales tax collection. And then finally, to the software changes, which are frequent, as we get into the new year, which is going to be, your busiest time of year, come soon. So it's really important that you have a good system in place to be able to properly apply the sales tax to your orders in each state in which you do business. So if you are looking for a better way to minimize your company's tax liability, take the guesswork out of all these rules and regulations, and give you more time in your day, I'm going to put my email in the chat. Feel free to reach out to us, and we would love to chat. And with that, I will send it back to Vicky.
Thank you. I'm going to add a few more things on to that, just because I know I deal with the sales tax issue a lot with a lot of my clients. And one of the things that, what Avalara is so good for is when you have a company that does a lot of items that they have to add sales tax to, that they're selling directly from their company. Keep in mind, there are now, with a lot of the new e-commerce stuff, when you have those agreements with the e-commerce, they will collect the sales tax and do all that for you. So make sure that it's something that, isn't already being done through one of your e-commerce softwares, because you wouldn't need to have Avalara if that was the case, right, Jared?
Well, our accuracy is going to be a lot better than most of the e-commerce shopping carts. When it comes to states like Colorado, you have these localities, where the home rule states, where you need to get a more precise calculation of where exactly the sales tax needs to be collected and remitted to, because in a lot of cases you have to file separately to these localities in a lot of these states. So it can really depend on where you're selling, and if you need more accuracy with your rate calculations, which can be pretty common in a lot of states.
Yeah. But it can be tricky, so just make sure you stay on top of it.
That is correct.
Yeah. Thank you, Jared.
Mm-hmm.
Go ahead. Okay. Some people run what they call a customer deposit liability account. And what they're doing is taking money from a customer client for something that they're going to be doing for them. Now, people handle this different ways. For jobs in progress, and if they haven't even started yet, they'll take a deposit. And everyone, like I say, everyone deals with this a little bit differently. But the main thing is that You can run that report and see what's sitting in there. You want to make sure that whatever's in there are jobs that are in progress. And then if the job is completed at the end of the year, there should be no amount left in customer deposits for that particular client. And there shouldn't be any negative amounts if using a liability account to track. So what happens is someone gives you a $5,000 deposit, you can put it in customer deposits, and then as you go through the process of invoicing, those deposits can get moved as payments on those invoices. It's not a set process because everyone likes to see it differently. Sometimes people just go ahead and put things to accounts receivable as a credit because they know that they're going to be invoicing that client. So it just depends on how what's easiest for you. We got to look at what you have going on and make determination what's the best route, how to track that. But you don't want to leave stuff in customer deposits that is not actually still a deposit. Go ahead. Okay. Sales tax. This is the internal way for sales tax. So there is a sales tax function in both desktop and QBO. And if it's set up properly, it will do all the calculation. And at the end of the month, you can go in and run a sales tax liability report and a sales tax revenue summary report. And you look at that and it's going to show you, like in the middle, it shows you what those reports say. This is how much we owe State Board of Equalization for San Domingo. This is what we owe for this. But you generally are going to have to go in and enter that sales tax information in usually a portal that each state may have. It just depends on the state. So once you've gone in, like for example, Washington State, they're similar to a lot. They have different rates sometimes for different cities or counties. And like Jared talked about Colorado, I used to live there. And when I was in the car business, it was a nightmare because it was, you had all these different tax rates and we had to handle every car sale very differently. And so you want to make sure that this is being done properly. So basically, when you enter it into the site that you're paying the sales tax through and it's calculating what you owe, sometimes it's not going to be exactly the same. So the balance that it will show there, where it says total balance, is going to be what should be on your balance sheet. We can make adjustments to that. So say, for example, that it's showing that it's $6,191 due. But when you do the report, sometimes people will come up just a little bit less, a little bit more. But if it's a huge difference, and that probably indicates there's something wrong. But say you came up and you're only having to pay $6,191. So you got to make an adjustment of 23 cents to make sure they did $1.23 to either reduce or increase it so that it matches what your payment, because once you've made that adjustment, you're going to make your payment and it's going to clear out all those items for the different counties and cities. And but this can get tricky. I've helped a lot of people set this up. I've helped a lot of people fix it, because if you don't do it right, it can come out. But if it's set up right, it will really help you in providing those numbers to the reporting. I can't think of the word I'm looking for. The state that you're reporting to. Okay, go ahead. Okay, so now we're going to talk about payroll liabilities. We want to make sure that our payroll liabilities have been paid when they were supposed to have been. Usually, if you're using the payroll in QuickBooks Desktop, you've got, it'll show you right there. You can see that it'll show that you got to pay this, and you got to do it by this time frame. It doesn't mean you have to wait till that time frame, but you have to pay it by that time frame because you don't want to pay anything late. So in here, you're going to the payroll center and you want to make sure these liabilities are paid and that they're reconciled. That's another thing that doesn't get reconciled. If it's done properly, it should get reconciled, and there's reports in payroll that shows you what your payroll liabilities are, and that should match what's on your books for your payroll liabilities. So within here, you just go to pay schedule liabilities, you pick which ones you want, but you also can go and create custom liability payments. And when you go in, where on the right side there, the bottom, you'll see it says create custom. Sometimes things don't show up on the, like, for example, 401k. Some people don't set up 401k to pop up here to when it's due. So they can just go in to create custom, but it's going to pop up as a liability that you owe. But these are more the reminders of what you owe and not necessarily everything. Keep in mind that. But we have specialized people for payroll, and we can help you through this if you have any questions. But you do want to make sure that they're clearing out properly. AR and AP no-nos. Okay. So with this, and this is I should say not a pet peeve of mine, but because I like things very tidy. If there's a zero balance but transactions are still showing, there's ways that we can get that. You just have to apply the payments. So what happens is, for example, say you took a payment of $500 and you receipted that into accounts receivable, but you hadn't created the invoice yet. Then you create the invoice. Well, the invoice needs to have that $500 payment applied to it. And when it does, then it takes it out of the schedule. So there's a report that's called open invoices, and that's what people owe you. So when they have a plus and a minus and the total balance is zero, that's something that you need to clean up. If you are using those reports, often, like you should be, because they are receivables and payables, you can see those automatically when you run the report. You'll say, oh, that's an in and out. Well, that's a zero. I don't need to worry about that. Well, go in and apply the payment so that it can get cleared off that schedule and doesn't keep building and building. We can show you how to do that if you're not sure. We want the balance sheet to match what's on those schedules. And I found very rarely that they don't. It's if somebody maybe posted something wrong, but they generally are matching. And then we've got cleaning up unpaid bills, open invoices. So unpaid bills is stuff that you're paying vendors. So I've had a couple of clients in the last couple of weeks ask me, how do I if I have a credit sitting there, how do I use it? So there's a way you have to go in to pay bills and apply the credit to those outstanding vendor invoices. We want to make sure that if there's zero, that we're getting those cleaned up as well. Because if you don't, then it messes up your aging. And if you're not, if you're paying attention to those things, that's why this is so important, is to make sure that this is being done properly. This is one of the biggest things I look at with every scope that I look at someone's books to see how bad it is. Because what I find in addition is that sometimes things are being put to either accounts receivable or accounts payable that are in error. And so we want to make sure that that's not the case. Go ahead. Okay, so here's your AR aging report. So one of the things that you can do on here is, of course, aging for the balance sheet is only going to show open AR and open invoices and APs if you're on accrual basis. If you run a cash basis, it doesn't show that because those don't include. But this is just going to show you who owes you what and how old it is. I like to run this just so I can see who's in the elder column. Then I can pursue those to get those paid. So what does that go? Okay. This is the AR. What is that down there? Pay bills. It's the same type of thing. Accounts payable is the same thing. Accrual, it's going to show you what's in there. Cash, it doesn't show it on your balance sheet. But we always run accrual for these reports because we want to keep them clean, regardless of when your reports are run, accrual or cash. Go ahead. So here it's talking about QuickBooks Online. You didn't apply the payment against open invoices. When people are paying you, got to make sure we do that. And one of the things that's a big problem I see is that you didn't make the deposit in QuickBooks correctly, and you just accepted the bank download, and then that didn't necessarily go to the right place. And let me explain that a little further. You may say, you've got 4 or 5 payments you received from clients, and you put them in undeposited funds. And then when your bank feeds come in, if you're coding your bank transactions, if you have not taken those 5 checks and created a deposit to go in your register that equals the exact amount that's coming from the bank, it won't match. And so what a lot of people are doing in error is they're just accepting those deposits into income. Well, that's duplicating income. So we want to make sure that that we're not accepting deposits in the bank download if we're using the undeposited funds, because then it can get really off. I've got a client that's probably got $1 million sitting in undeposited funds, and then all these bank deposits that don't match. So it's a lot of work to go back. So stay on top of that. Don't let it get crazy. It should be clearing out regularly and should be matching in your deposits. Go ahead. Clean up your list. You know, the more stuff you have in your data file, the more clouded it gets, or more cluttered it gets. So I always suggest you know, reviewing your account types, making sure that what you have is what you want. Merging accounts are similar. I find people will go to post something and they'll add an account that they already have, and then they'll end up having it in 2 places. So we can merge similar accounts to make it clean, because you don't want to have, you know, 3 different telephone expense accounts. You just got to make sure you're picking it when you go into the chart. Make sure that the list order is correct, and I'm not sure why it's saying don't use parent accounts. We have what we call header accounts, and header account, oh, that's what that's, I'm sorry. We have header accounts. So if you have a header account, what that means, a parent account, is that you have, say for example, you have utilities, and that's your parent account, but you want to see all the detail for the individual, like say electricity, gas, water. So you have sub accounts. So make sure that when you're posting things, you're not using that header account, that you're putting it in the sub account. I suggest people capitalize their header account so they know, oh, that means I don't post to that one. I post to a sub account, because it just messes up. It shows as other on your P&L and balance sheet, and we want to make sure that that doesn't do that. We never want to see stuff that says other. That means it got into a parent account. Items having expenses. Oh, there's certain things that are set up in the items, and if you don't set those up correctly, it can go to the wrong places. I have a client right now that set up a whole bunch of new items and didn't set them up to the right income account, and there's probably 200 of them. So we have to go in and make sure that, and change it to the right income account so that everything goes to the right place on your GL and in your reporting. So we want to make sure that if you don't know how to set something up and how the income and account can be reversed, you need to get with us and we can help you through that. Okay. So these account types, if they're an AR or an AP, you can't change the account type. That's different. But there's certain things that you can change. So say you put something in, like this is showing you an example of subcontractors. So subcontractors would be considered your parent account, your header account. And right there, or that's a sub account, I'm sorry. And it's a sub account of the job expenses. So when you run the report, it's going to show job expenses, and then it's going to list all the sub accounts underneath. So up there though, say we all of a sudden didn't want that to be a sub account, or we needed to change something. We can go in. A lot of times I see people set up the wrong account type. They set up an expense, but they set it up as a checking account type because they didn't pay attention and pick that. So when we review everybody, we look at those things to make sure those account types are correct. So if you're ever setting up new accounts and you're not sure that you're doing the right thing, give us a shout and we can help you through that. And we talked about this, about merging similar accounts. Now, what happens is it's going to say, if you go in to change an account, like say this gas and electric, when it says this name is already being used, would you like to merge them? Say you want them, somebody made a mistake and they set up the account incorrectly. So a lot of times you can go say, I want to change this, and I'm going to go in and edit the gas and electric to say just electric, and then it's going to ask me if I want to merge them. So what it does is it takes everything in those 2 accounts and puts them into one, like they should have been in the first place. So merging is a possibility. Don't try to do it yourself if you're not sure, because that can create more of a mess. But there is, I merge accounts all the time. I have to merge even bank accounts. Sometimes people set up a second bank account and don't realize that they've done it. So pay attention to that when you're looking at your chart of accounts. Okay, list order, your desktop is flexible and it lets you drag the accounts to where you want them. So you can click on the dot to the left of the name, using a double arrow, cross drag it where you want it. It works on any list. So most of the lists that it talks about are generally going to be in alphabetical order, or if you have account numbers, it's going to be account order, but you can always usually sort it the way that you want to. And you can customize this to how you want to look at things. Sometimes the customization only applies to your login. So if you have 8 different people that have logins to, say, a desktop file, if they customize stuff, it's only going to be customized under their login, not the company login. There's different places you have to change the entire preference for the company. But each individual can customize their desktop so where they maybe only see these certain icons, or they have favorites that they've saved on the left so they can go right to them. Again, if you're not sure about that, it's all a matter of making it the best usable and quickest functionality so you can get to where you need to go right away. And people get in the habit of that a lot of times. Even though there's probably 3 different ways to get to everything, sometimes you just want to click a button and say, that's where I want to go, and it takes you right to it. So go ahead. Okay. Using parent accounts, we've been talking about this. So this is what I was talking about. So see, we have job expenses is considered, and you can have, I think it's up to 3 subs. I can't remember the number, but like job expenses will be considered your header. Under job expenses, then you have job materials. And then under there, they've chose to break it out for decks and patio and plants and sod. So it's going to show you those 2 are sub accounts of job materials, which is a sub account of job expenses. Some people just have job materials and they put all their materials to just that account. They don't break it out. And then you've got the subcontractors under job expenses. And then what I was talking about here is that you've got the job expenses other. So what that means is that $800 got put to the header of job expenses, and it should have been, the sub account should have been chosen. So it's easy to go in and just open it up and put it to the right account that you need to. Now, if you have an accountant version, on desktop, QBO, it doesn't work. There's different tools in QBO that we have as accountants that we can take several transactions and move them and reclass them at one time. So you're not having to do transaction by transaction. I found, 50 transactions in here. Well, shoot, that's going to take me forever. Let me go in and just click them all and have them go to the right place. So if you don't know how to do that, let us know, because it does save a lot of time. Not everybody has access to that tool, but they have made it more accessible and more accessible as they keep enhancing all the softwares. Okay, this is talking about the items account and what we were saying earlier here. You've got, your items are what you sell. Okay, so in every item, this particular one it's showing here is an irrigation hose, but they have different sizes. So they've made sub products. Then you've got, so they put the title of the account that they wanted in. The first one there is showing the income account. And then the second one is showing cost of goods sold. You want to make sure that these are going to the proper place, and the inventory account, whether you're tracking inventory. If you're tracking inventory, the inventory asset's really important. If you're not, that isn't as much important as making sure you're using the right income account and the cost of goods sold. So when you go in to create an invoice and say you put in that product, irrigation hose half line, that when you create the invoice, that it takes it out of inventory and puts it to cost of goods sold to cost out what you sold that piece for. So like I say, I've got a client right now that did a bunch of these and they're all wrong and we have to go in and change them. And a lot of times it will ask you, do you want to change prior transactions? And a lot of times you do, because there's been so many that were done incorrectly. But it's really important with the product and service list, items list, that these things are set up correctly. There's a report you can run, all of them, and see what you've got and make sure that everything looks correct. Down below, it's talking about, where'd we go? down below here is when you run the reports. Here's where if you click on customize or customize columns like it's showing, you can add different headers to this report. So a lot of times it won't come up with the income and cost of goods sold when you just run the initial list, but you can go in here like it's showing, customize columns, and add those columns to your list that you want to see in the report. You can also remove columns that you don't want to see in the report. So that's what that's showing you below. Okay. Customers and vendors. So this works the same way as accounts, and a lot of times they get set up incorrectly. So but the one thing is that you have to, especially in QBO, it does not let you have the same name for a vendor and a customer. You have to give it a determination of whether it is customer or vendor if you have the same. So say, I'll just use myself example. Say I'm your customer, but you're also paying me for stuff. So I can be put in as Vicki Newton as a customer, but on the vendor list, I need to be put in. A lot of people will put the V before the name or the V after the name because it won't let you have the same for both customer and vendor. And then there's other types of names instead of vendor customer that you can use. But for those things, if there ends up being duplicates, and sometimes it might be an Inc. The name is under say out of the box Inc. or out of the box, and you've used both of them. Well, let's make that correct so all your history is under one customer or one vendor, so we can merge that together. And that's something that I just did the other day with a client. They're like, how can I have 3 of these? And so we merged them all. So then you look up the history and everything's there for that customer. So it's just a matter of who has the ability to add that information and how, if they're doing it incorrectly. And probably 8 times out of 10, they do it incorrectly. So I want to stay on that. Go ahead. Okay, so here's where it's going to tell you the duplicates. It's going to say, this name is already being used. Would you like to merge them? You can say yes or no. And most of the time you're going to say yes, because you don't want 4 different vendor name variations, basically the same vendor. So like for this one, it says electric and elec. Well, that's really the same thing. So merge them so you only have one and you don't have stuff in 2 different places. Go ahead. So here is where it talks about that, separating the same customer and vendor. So the name's already in use in the job list as Adam's Candy Shop. And you cannot use that in there again. It says append a letter or number. So that's what I was saying. You determine, most people just do a -V or a -C. But if you're consistent, I would say put all your clients in. And if they're also a vendor, then put them as -V. But don't have a bunch that are just V's and then put -C. So you kind of have to determine what consistency do you want to have there. So if you don't see it in list, it could have been marked for deletion. A lot of times you can run a report that shows you, and you can click it to see what has been made inactive to see if you have to make it active. And the name in the payment settings, print check as field, what will be used on the checks and forms. So even if you put Adam's Candy Shop V, that's not necessarily what's going to show up on the print check as in the vendor record. There's another line there that will say print the check as, and you just put Adam's Candy Shop then, because you don't necessarily want those V's or C's to show up on the check. Filing 1099s. There's a question here, Jeanette.
Yes, so these are kind of nailing down where our audience is with 1099s. The first polling question is, how many 1099s do you file each year? We've got a quarter of the attendees having voted already, so we'll keep it open for another 5 seconds or so. 5, 4, 3, 2, 1. And so it looks like we've got most people filing 0 to 5, with a good third filing more than 10. So
Go ahead.
we've got another poll here as well. Would you consider 1099s a pain point for you or for your organization? Got about 50% of people. Give it another 5 seconds or so before we close out the poll. 4, 3, 2, 1. And it looks like that's 1099s are not a big pain point for our audience today, but we're going to run through some steps, I think. So Vicki, go right ahead.
Okay. So 1099s though can be a bugger, and we have every year end, we have a huge process that we go through in order to determine if our clients need to submit 1099s. So the 4 W's of 1099s is, what are they? What do I need? Who gets one? And which transactions count? Okay, so 1099s are intended to report to the IRS what you have paid someone that is not an employee, who is a contractor. So for example, you pay contractor Joe Clark $5,000, but you just paid him directly $5,000 and he's not incorporated. You have to get a W-9 from that vendor, and you have to issue him a 1099 at the end of the year and record it and pay it to, submit it to the IRS that you have done that, because they, on the contractor side, have to use that as income. So a lot of times vendors aren't being set up correctly to track them. So there's a process within both that you can set it up to track them properly. There's different reports you can run to see who's getting over the $600, paid $600, because you don't have to file them if they're under $600. You do not have to file them for a company that's incorporated. But you do have to file them for anyone that's not, and for anybody you pay rent to, which is the, what do they call that? There are different 1099s for people that you pay non-employee compensation to, or rent or interest compensation. So those are the 2 that we usually see, are who you've paid rent to and who you paid contractor to. So who gets them are all those people that reach that threshold. The transactions that count are things that you wrote checks for. My understanding is if you paid with a credit card, it does not get included in the 1099. So we can help you through this. We actually have an email that probably will be going out soon, letting people know, here's what we do for you. And we can help you get it, make sure it's set up right in your system. Everything gets submitted electronically anymore, and they even have that option through QBO, where you can just click a button and it will send it to the reporting companies that it needs to do. But we have a team that usually handles all these at the end of the year for all of our companies. If you have 1 or 2, it's really minor, but still you got to do them right. So we can answer all your questions on 1099s, because we do those every year. Go ahead. So here's where it talks about what is a 1099. The NEC is for non-employee compensation. So anybody that you have paid money, that you paid over $600, you need to make sure you get a W-9, because that tells you their name and their tax ID, and you have to have that and an address, and preferably an email, because they can actually get emailed the 1099s once they're completed. You've got 1099 miscellaneous payments that are usually the rent. There's additional types, but most companies don't have them. Sometimes people will if they're paying out dividends. I had a company once that was paying out big interest payments to people that they had loans with, and you have to send them to those people too. So whenever you're getting a new vendor, I always suggest get a W-9, especially if you know you're going to be doing a lot of non-employee compensation, because you can put that information in the system. In QBO, you can attach it right in the customer, or the vendor file, so you can always pull it up if you need to see anything. But those are very important, and they do need to be updated on a regular basis. But don't wait till January 15th to go start asking for those things. Start looking at what you have now, and we can even do that for you. You can do a consultation. We can look at what you've got, so we could say, hey, you need to do this. But start looking at it now and see, who do I need to make sure I have these for, and who is going to be getting a 1099, because if you do it right, it'll all calculate the reports correctly for you, and make it a lot easier transmittal. People can do it themselves. But when it gets more complicated, we suggest you have us do it. Go ahead. So like I said, you need those W-9s and you need good payment records. When they say good payment records, what I am talking about there is if you are writing a check to somebody or just recording maybe you did an ACH to someone, you've got to make sure you put that information in the vendor. Some people will say, I'm just going to record this, I'm not putting the vendor, or it came through the bank feed, I'm not putting the vendor. You got to make sure that you've got that vendor correctly. So when the reports are run, that it takes that vendor and totals what was paid. If there's no vendor, then it's going to be missing. So there is a process that generally we go through and look at particular accounts that usually have these type of expenses to see if there's any vendor information missing, because it's not like you just go in and just print them all out. You got to do your legwork to make sure it's all correct first. So make sure you're always putting a vendor in on any payments that you make. And then who gets it? General criteria, you made the payment to someone who's not your employee, you make a payment for services in the course of your trade or business. That can be for people who do consulting for you, not necessarily, I mean, a lot of people have little personal companies and that's who you have to do it for. Now, someone like us, people say, oh, do we have to issue you a 1099? No, because we're a corporation, so we're incorporated, so you don't have to issue us. But you do have to issue people who made their eligible payments to that payee at least $600 during the year. And then down here, like I said, who doesn't? Corporations or entities filing taxes as corporations. You don't have to do them as employees, and you don't do for vendors paid for merchandise or freight. It's only for services. Okay. And then you can check with your accountant for additional information. So which payments count? We talked about this a little bit, but here's more detail. General criteria is payments made by cash check, wire transfer, electronic check, ACH, Zelle, online bill pay, or direct deposit are included. You notice it does not say right down here, excluded payments that are made with a credit card, debit, or payment card, and certain other types of payments, including some third-party network transactions. But the more and more payment types that get out there, the more you have to be cautious of what you're doing. But yeah, if you pay a vendor and it's all on your credit card, you don't have to issue them. But if you've issued them checks, then yes, you have to issue them one. So from the form itself, on the form 1099-K, it's reports the same that you received during the year from applications. So you're going to possibly get from platforms that you use, like it says PayPal, Venmo, eBay. You're going to get 1099s from the people that has been doing paying you for your sales. And it's sent by the payment platform. So I have customers have both. They get a big one from, say, Amazon. And then eBay, you get a thing that says this is how much income you took in from this platform. You're only required to report when a taxpayer receives 5,000 or more payments during the 2024 year, currently this one. And it's part of a phase into the American Rescue Plan threshold of 600. So we want to make sure that we're always following those guidelines. If you don't receive a 1099-K, you should report all your earnings on the IRS on your federal income tax return. So a lot of times, if you're not doing your tax return and you get a 1099-K, people just give them to their CPAs, but a lot of times they don't match what's on your books. So, and if it's a huge difference, it could be how you're accounting for those payments. Some people, for example, eBay, you may have taken in $50,000 from eBay, but that number is actually broke out in income less fees paid and it's fees paid and anything that you are settling with them. So you want to make sure those balance. I have one client that hers never seemed to, but it's because the way she posts her deposits does not account for those fees they take out of what they pay her. So we usually have to set up some type of process to make sure you're recording those correctly and that your CPA is coming back to you scrambling, trying to figure out why it doesn't match what's on the 1099-K. Go ahead. Okay, so important info is that your NEC forms 1099 are due to the IRS by the 31st of January. So like I say, don't wait till January 30th and call us and say, can you get these done by tomorrow? 90% of the time, we're not going to be able to. It just depends on how busy we are. But that's why we send this information out early, so we can get on it early, so we can make sure all this stuff is filed properly. For the tax year, you've got to e-file with the IRS if you have more than 10 returns. So everything we do is pretty much e-file. And like it says there, we e-file 1099s. So that requirement is taken care of you. And generally, even if you have less than 10, it can be, it might as well just e-file it. It's much cleaner that way. Go ahead. And the importance of this is, you know, timeliness and making sure that you're complying, that there's no non-compliance issue. And, you know, I tell you, the IRS, sometimes it seems like they can look at one thing and then they don't look at something for years. So, you know, you can say, oh, they never look at that, but there might be a time when they will. So you want to make sure that there's no chance that you're going to be, you know, having an issue by not fulfilling those requirements as a company. Okay. So this is our 1099 pricing for this year. And it's saying if you sign an agreement with us by the 1st of December, that it's $375 for us to process your first 10 vendors. And that includes doing part of the legwork and getting us submitted. If you wait till the 15th of December to sign up, then it's going to be $450. And then there's also an additional $35 vendor per vendor for each one over the initial 10. So if there's more than 10, then it's like say $35 for each one. Don't buy forms. That's one thing I'm going to tell you now too. A lot of people don't understand that. You don't have to buy W-2 forms or 1099 forms. Most of them would just print out on plain paper, but some people will still do that. But you don't necessarily have to. Go ahead. Okay, so the final review. The other items that you need to be reviewing are your employees, vendors, customers, key relationships. Oh, we're getting close. Go ahead to the next one. Sorry about that. Okay, employees. Is your staffing level appropriate? Do you have an organizational chart? Are your employees productive? Do they have enough work? Too much? Have you done an annual performance and salary review on them? Every employee needs to see that. Everyone knows how hard it is to hire people these days. And if you aren't doing these things with your employees, they're more inclined to leave. Are they getting the support they need? But you want to retain these. So these things are important to employees, and you need to make sure they feel like you care. So there's just too many options out there if they're not happy. Go ahead, next. Looking at your contracts that you have with vendors, customers, you need to look at these periodically so to make sure they're not auto-renewing for things you aren't in agreement with. Can you get a better deal? Never hurts to put it out to bid. If some people have, say, a copier agreement, sometimes you can go to a different copy company and maybe get better money. So you always want to generally look at those things periodically to make sure you're getting the best price. Go ahead. And then make sure that you've got good relationships with your banker, your bookkeeper, your CPA, your business coach, and your employee benefits advisors. Okay. Q&A. Does anyone have any questions?
So far there haven't been any that have come in, but we've got just a minute left. So I'm going to go ahead and just throw up our information on there in the event that you need help with any of your 1099s, end of your cleanup or closing out the books, or want to get started with an Avatax demo. Please feel free to reach out to us at this email address, hello@outoftheboxtechnology.com. In the event that you had questions and we just didn't have the time to get to them, you can also submit them to that email address and we will get back to you. It looks like we've got about 30 seconds to the top of the hour. So I want to thank Vicki and Jared for being here today and sharing your expertise. Big thank you to our attendees. Again, just a reminder, this recording will be shared with you later along with the slide deck where you can review any important items. So thanks for attending, everybody. Thank you again, Vicki and Jared, and have a great day.
Thanks, everyone.
All right.
Thank
Bye-bye.
you.